Hello traders, Gary Wagner here, just about 1 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, 16th day of April 2020, and this is the Daily Report for Gold and Silver. Now for the second consecutive day, we have seen small to fractional gains in terms of lower gold pricing. The entire precious metals complex, with the exception of platinum, were up today. However, what is most interesting is that today's red candle, the lower close and lower low, actually confirms the Three River Morning Star that we identified in trading yesterday. What we'll talk about on today's show is whether or not recent action indicates that we are consolidating, forming a base, which means that we would stay sideways and then move higher, or if we're at the beginning of some sort of correction, whether it is shallow or whether it is deep. We'll explore those possibilities on today's show, but first to the price board. Gold did close lower on the day, down $6.40, and is currently fixed at $1733.80. That's a net decline of about 0.4%. This is the second consecutive day we've seen lower pricing, and we are noticing a couple of things on our weekly and daily chart that I will briefly go over. First, when we look at our weekly chart, we can see that the candle itself contains the record high that was achieved this week. That's the top of this wick right here. However, it is a doji-like candle, meaning the open and close are relatively close together. If it had gapped above that, it would be a star in the evening position, or if in fact that body of the real candle came in about the midpoint of the prior candle, that would represent a bearish harami. We'll have to see how this unfolds on Friday, but if we get a further decline, it would be a shooting star. When we look at our daily candlestick chart, we can see that this candle in today's market action confirmed the Three River Evening Star pattern that we identified yesterday. Of course, a couple of days ago, we identified simply a doji star in the evening position. When we look at spot gold, it's quite different, because spot gold actually closed up about $1, so the spread continues to narrow, with spot at $17.17. Platinum is currently trading at $808. That's after factoring in today's fractional gain of about $3.40. Palladium down $28.50 at $21.25. And silver had a fairly stellar performance, gaining about 1.52%, a 23-cent gain, still under 16, but now currently fixed at $15.74. Of course, a huge factor in the precious metals markets today was a return of dollar strength, with the dollar gaining almost 0.7%, now back over 100 and currently fixed at 100.175. Let's take a look at our technical studies. As we spoke about over the last couple of days, as well as today's opening letter, the real key to this current small price decline really occurred on Tuesday when gold prices hit the record high of the year. It wasn't the fact that it traded so high. What was important in terms of seeing some potential negative or corrective action occurring in the near future was the fact that it closed well below that particular price point and couldn't sustain any kind of real gains, even though it did close slightly higher on the day, and it did gap above the prior day, which would have been Monday's candle. What we saw yesterday was a red candle with a lower low than the previous low, but at the same time, it was a long candle, but I would have liked to have seen greater size. At least the low of the market match the low that came in on Monday. That, of course, did not happen. Today, we did get a confirming candle because we have a red candle with a lower low. However, there is a pretty big caveat, and that is the high achieved in trading today was higher than the previous high, which tells me that we could see the market consolidate rather than correct. However, all signs currently point to further downside pressure, at least on a technical basis. And the reason I say that is because we effectively closed below the 23% retracement, which occurs at 1739. If in fact we see lower pricing continue, my best estimate would be for the market to go to the 38% retracement level that occurs at $1,707. The next chart that I want to look at is still a daily chart. However, rather than it being in candlestick format, we have put it in Heikin-Ashi or a Japanese average chart. What we look for in this type of chart is long body size. That indicates that the trend is fairly strong. In the case of a green candle, you've got a strong bullish uptrend. In the case of a red candle, it is the opposite. It indicates that you've got a strong bearish downtrend. When you notice recent activity, you had an absence of wick, and this comes in, of course, at the beginning of the week. But yesterday's candle, which was a confirming candle for the Three River Evening Star in a standard candlestick chart, look at the differential between the open and closing price, and it is a doji candle, just as we're seeing a doji candle today. The key difference between a Japanese average chart, a Heikin-Ashi, and a candlestick chart is how they fix their open, because the open is always fixed as the midpoint of the prior session's trading day. You can see these arrows that I'm putting in and how that works. What happens when we get these small-bodied candles, particularly what we're seeing now, is it shows that the uptrend, which was dynamic and strong, has possibly run its course. That doesn't mean it won't consolidate, form a base, and move to higher pricing, but at least for now, it indicates a decent probability of either sideways or lower pricing ahead. It is for that reason that my recommendation is to maintain our current neutral stance and wait for some technical confirmation or fundamental event that would move the market higher. This has been Gary Wagner, wishing you as always good trading, and we will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.